Throughout history, if you print a lot of money, ultimately led to a debasement of your currency, what for me seems to be obvious reasons. And when currencies go down, something has to go up against it. And usually real assets go up against the currencies. And so I would suspect that we're going to have the price of real goods going higher. We always have anyway. But again, you have to consider the supply and demand aspects of it as well. But if you have a lot of money printing, the value of the money is going to go down and the value of something is going to go up against it, whether it's sugar or, who knows what, lead, something. Even now China has debt. In 2008, China had a lot of money saved for a rainy day. It started raining and they started spending the money and helped save the world. Now even China they're going to be bankruptcies in China. It's going to shock me, and I just told you it's coming. It's already happening. So the next bear market is going to be a nightmare. Is that some kind of huge observation, or is that just simple looking out the window? To me, it's looking out the window, a simple statement. The United States is the largest debtor nation in the history of the world. Doesn't matter who stops buying our treasuries. We got a problem. We have a problem even if people continue to buy our treasuries. I mean, it's a good time to be old because the old people are getting the benefits of all of it. It's not a good time to be young. I got 2 teenage children. The problems they're going to inherit. It's not a good time to be young. It's a good time to be old. Everybody is doing the same thing now. Everybody's printing money as fast as they can. Not everybody, I should retract that. Nobody is printing money as fast as the US and the Japanese, for instance. In China, they still have interest rates, not great interest rates, but they're still proper interest rates. Whereas in Japan and America, there are no interest rates anymore. And in Germany, so some countries have done a less bad job than others. I am looking, because I know enough history to know that somebody's going to come out of this in better shape compared to others who are going to come out in worse shape. The key, of course, is to find who. And I don't have an answer yet. I do know China's doing a less bad job than Japan, for instance, but I own Japanese shares because they're printing money every day and buying ETFs. The Bank of Japan has more money than I do. If they're buying ETFs, I'm buying Japanese ETFs. Come on. No, whenever there's a problem, people look for a theory. Mr. Marx had a great theory, and a lot of people tried it for a long time. Nobody wants to be a Marxist anymore, but it was wonderful theory. Now there's one called MMT, More Money Today. Everybody loves it. It's a fabulous theory, and we'll probably try something like that. Like Marxism was a free lunch for everybody. Well, it didn't work. And MMT, whatever the real name is, More Money Today, basically it's more money today. It's an easy way. And Jeff, people love easy answers. U.S. government has made it legal for the central bank, the Federal Reserve, to buy other assets. And when things get really bad, they're going to do everything they can to save themselves. They don't care about you or your kids or my kids. They care about the next election. And the way they do that is, if they have to, is they flood the money. They're all going to buy IBM or Ford or whatever they're going to buy. I mean, to me, it's just a simple fact. I look around the world. I know that in 2008, we had a horrible problem in the world because of too much debt. Well, I mean, I read the same newspapers you do. I know that since 2008, debt all over the world has skyrocketed. So I say to myself, well, the next time we have a problem, it's got to be the worst in my lifetime because the debt is so much worse than 2008. To me, that's just a simple statement. Yeah. Simple observation, like, we're going to have bad blizzards every few years. Well, you have bad blizzards. If I tell you we're going to have horrible blizzards every few years, is that a grandiose statement? Look at what happened in Texas. It happens. And when I say the next bear market is going to be the worst in my lifetime, I know what happened in 2008. I know what's happened since. How can it not be? To me, that's just a simple observation. There's a saying in the commodity business, and it should be in all businesses, that the cure for high prices is high prices. Because high prices cut demand and bring in supply. And that's what happened. The other part of the saying is the cure for low prices is low prices. If prices are low a long time, people buy more and stop producing. So, I mean, these cycles have been going on for hundreds of years, certainly, and probably thousands, and that's going to continue. Prices have been going up. We had a high price of oil and the declining reserves of oil. Known reserves were declining everywhere, still are. New technology came along, and for a while there, if you could spell fracking, people would give you money, and a bubble developed. Then, of course, we all realized, oh, wait, we got to make money. These guys got to pay their debts. Right. So the fracking bubble popped and burst, as all bubbles do. Fracking's still there, but you got to make money at it now. So known reserves of oil still continue to decline, except for fracking, and fracking's not a bubble anymore. If we're speaking specifically about commodities, we had a big boom. Oil went from nothing to $150 a barrel. It's now back to whatever it is. Now, we had booms, and that's happened with many commodities since then. Many commodities boomed and collapsed. Bonds are in a bubble all over the world. Property in many places sold. I mean, I can't believe what a bubble there is in property and sold. Many stocks are beginning to form bubble. I mean, not all stocks. I mean, there are many stocks that are still not up, but I've seen bubbles before. I know you have too, or read about them. So I can see, but commodities, that's the only asset class I see that's still cheap. Silver's down 45% from its all-time high. Sugar's down, 70 or 80% from its all-time high. Oil's down over 50% from its all-time high. So commodities is the only asset class as a class that I see that's still cheap. And I know the fundamentals are changing. More people in America study public relations and study agriculture now. Obviously, if the world changes, you have to change with the world. I mean, that's pretty straightforward. Energy is still the most important commodity, at least if you ask me. As I live in Singapore, and everybody here is still driving and taking the bus to work, etc., still has electricity. And nearly all energy comes from oil and natural gas. That may be changing. It seems to be changing. But even if you look at things like electric cars, which seem to be coming, first of all, you got to produce the electricity, which got to be made from something. Maybe it's sun power, maybe it's solar power or wind power. But electric cars, for instance, use 5 times as much copper as regular cars. So, yeah, the demand for oil may go down, but the demand for copper is going to go up, and lead and lithium and other things. I just wanted to say one thing quickly. I have not sold anything this year, and I have not sold anything short. I don't think this has ended yet. There are very few central bankers in the world who know what they were doing. India had one of the best a few years ago. He's gone now. But there have not been very many smart central bankers ever anywhere in history. So please don't believe they know what they're doing. They have been printing a lot of money all over the world. They have been buying assets all over the world. And throughout history, that has led to inflation. Now, they keep telling us there will not be inflation, or there will be not very long. They just don't know what they're doing. There's going to be more inflation. It's here. And things like silver and gold have always been a way to protect yourself from inflation. I don't think that the exuberance is over yet. All of these guys continue to print money. And what will happen when things get bad, when the markets go down for a while, they will panic and they will print more money. They don't want to lose their jobs. They will do whatever it takes to keep their jobs. It's not good for you and me. It's not good for the world. But they don't care about you and me. They care about their jobs. So when things start getting soft or going down, they will print more money. And we'll have a big rally. That will probably be the last rally. That will probably be when I sell. But who knows? It's always led to an asset bubble throughout history. Why is that trouble? Because when things get wildly overpriced, a lot of new people come pouring into markets, inexperienced people. They get excited and exuberant, and then when the bubble pops, and it always pops, a lot of people lose a lot of money. I hope I'm not one of them. I know it's going to pop someday. I know a lot of people are going to suffer. I hope I'm not one of those people. If you look back at markets anywhere, in the last phase, whether it's the last 6 months or the last few months, a year, some really crazy things have happened. You look back at the end of the 90s, the NASDAQ, the whole index like doubled in 6 months. at the end. And it's always that way. People get really excited and exuberant, and they see things going up. They don't want to miss it. They want to jump in. And you have really wild, crazy moves. In America, we sometimes call it a blow-off. You know, the market blows off. It goes up so far, so fast. So I would expect that is going to happen again. It has often happened in markets, and it will probably happen again when they start printing again. Because then, see, when things get bad and the central bank comes riding in and prints more money, everybody says, oh, we don't ever have to worry. The central bank will protect us. That's when you get really, really worried.